Straight to the top story this evening, the collapse of the US-based Silicon Valley Bank, a crucial lender to tech startups, only the second in US history to go down, has forced American regulators to step in to avoid a contagion and shore up confidence. Now, US regulators have said that the California-based bank, the depositors will be paid back in full. A second institution, that Signature Bank, has been shut down. Regulators said that its depositors would also be made whole. So what led to the collapse of the Silicon Valley Bank? First, the bank kept a small chunk of its deposits in cash and used the rest to buy long-term debt. It was caught off the wrong foot when interest rates spiked. Those once-safe investments looked a lot less attractive compared to newer government bonds. The problem accentuated when customers began withdrawing money on the 8th of March. SVB sold $21 billion of securities at a loss of $1.8 billion to ensure liquidity. On March 9th alone, SVB customers tried withdrawing $42 billion from the bank, equaling a quarter of its total deposits. And this spooked investors, leading to its capital-raising efforts collapsing a day later. Federal Deposit Insurance Corporation announced that SVB was shut down and placed under its receivership in a petition with the U.S. government. Y Combinator, an American tech accelerator, said 40,000 of SVB's depositors have small businesses and 30% of them may be unable to pay their employees in the next 30 days. Meanwhile, HSBC has agreed to buy the UK business of the bank in a last-minute deal. The US government has ruled out a bailout for the bank, and the regulators are looking for a buyer. Treasury Secretary Janet Yellen said, and I quote, "We're not going to do that again." Take a look.
The White House, US Treasury and the Federal Reserve, or FDIC, have imposed a series of emergency measures to shore up confidence in the banking system following Friday's collapse of Silicon Valley Bank, the largest bank failure since 2008. All SVB depositors will have access to their money from today. It comes on the back of concerns that only deposits of up to $250,000 would have been protected, throwing the future of most of SVB's corporate clients into doubt. However, SVB equity and bondholders will not be protected. Officials also closed down Signature Bank, another lender with significant exposure to the tech and cryptocurrency space that has seen its balance sheet hit by rising interest rates. And the Federal Reserve says it is opening up additional lending facilities to banks to ensure they meet their commitments to depositors. In a statement, President Biden said the measures would give the US financial sector the oversight rules it needs, adding that, quote, "Those responsible for this mess will be held fully to account."
You mentioned Silicon Valley Bank. There are recent developments that concern a few banks that I'm monitoring very carefully. And when banks experience financial losses, it is and should be a matter of concern.
So indeed, HSBC buying SVB UK for £1. The HSBC also said in a statement that as of Friday, there were more than about essentially 6 billion British pounds in deposits. And with this deal, what's important to keep in mind is that those deposits are protected and without taxpayer money, which was a very important detail for the British government. So let's see how this story will keep unfolding in the coming hours. It is definitely still early to fully understand the picture from the markets, but it's important to also keep in mind that perhaps those contagion fears have not been fully offset despite this deal with HSBC and SVB UK.
Sylvia Amaro, many thanks for joining us. Now, India's cross-border SaaS companies were on the front line after the collapse of SVB, with most having accounts with the beleaguered bank. Software leader Freshworks, in a statement, said that its exposure to Silicon Valley Bank was minimal and that it did not see, and I quote, "any disruption." Meanwhile, India's gaming giant Nazara Technologies said that its stepped-down subsidiaries Kidopia Inc. and MediaWorks Inc. held cash balances worth $7.75 million in SVB, but the company expected no impact on day-to-day operations after the Fed's move.
The overnight statement by Senator Yellen saying that the government will kind of, ensure that all depositors are covered, not only the amounts covered by $250,000, but beyond that as well, gives us a lot more hope. They offer, especially for international companies like ourselves and our subsidiaries, much faster onboarding and on-ramping, for accounts.
Well, reactions coming in from the startup ecosystem. Joining us now to discuss this further, Vaibhav Domkundwar, the CEO and founder of Better Capital, and Nitin Sharma, the co-founder and General Partner of Antler India. Gentlemen, appreciate you joining us here on the program. Bev, let me start by asking you, I mean, at this point in time, I think a collective sigh of relief with the regulators stepping in and stepping in as swiftly as they have. But take me through what has gone on over the weekend, the conversations that you've had with portfolio companies, with stakeholders in the ecosystem in general.
Yeah, thanks, Shireen. Look, I think we're coming out of 3 absolutely crushing days. I've been an entrepreneur for over 20 years, and I don't think I've had an experience like this where you suddenly are told that you may actually not have access to the only bank account that runs your company, right? So I think, this started on Thursday evening when the early reports around the fear came in, and a whole ecosystem around the world banks with SVB, and we all wanted to be very responsible about not causing more damage. But I think the fear just took another proportion, and I think every founder was really forced to figure out what next. So I think the most important thing was not to panic, right? So I think we took it in a very positive perspective from at Better Capital in our portfolio. We essentially said, let's do what we can control. And that was, let's open alternate bank accounts when we can. Let's monitor very closely what is going on so we can take the necessary actions. But I think between Thursday night India time and Friday afternoon India time, I think everything just became 100x worse, where while we were able to open accounts, getting friends across our global markets to help us across so many different things, people were just not able to wire money out as well. So, just imagine the founders who are supposed to make payroll, who are supposed to essentially, they just don't know. A lot of founders actually found out what FDIC insurance is for the first time. So it was just crushing, and I think it was really a process that we had to undertake. We kept our heads down. I don't think anybody has slept for the last 3 days. So this morning was actually a welcome relief, though we have to see it through fully.
I can imagine welcome relief, but of course the mechanics and the details yet to be worked out. Nitin, I would imagine the same was the case with you, as we just heard there from Vaibhav. 3 sleepless nights, a crushing weekend, as he called it. And of course, everyone trying to understand not how this is going to play out in the short term, but what this actually means for startups in the medium to long term, given the fact that we are now in an era of high interest rates. It's going to be high for longer, and the era of easy money and zero interest rates is over. Nitin, how is this new reality starting to work itself through the ecosystem?
Thanks, Shireen. I agree. I got to know SVB well in 2008 when I was a VC in the US. And I saw that a bank focused on the needs of startups, was very unique. And so my reaction initially was a lot of sadness, because it was a fantastic institution for hundreds and hundreds of founders. And of course, that led to, the worry that Vaibhav just described. We did a comprehensive assessment across our global portfolio and realized that we had less than 1% exposure. And we, like Vaibhav also mentioned, did everything we could to connect our companies to as many resources as we could. In terms of your question, I think specifically for the tech ecosystem, the short term, we have a lull right now. We've understood that hopefully the extinction event that people were talking about, or the run on other banks that people were worried about, will not happen. There is a medium-term question, because some folks will still wonder what the actual quality of assets at some of these banks are. In my opinion, SVB was actually banking a very high quality of borrower. It was really fueling the innovation economy. And the longer-term question really is, which other banks will step up in India for Indian startups, but also globally, to create the same kind of offerings and services that founders had gotten used to with SVB. If you're a 23-year-old founder in life sciences and you get your first angel investor, your first believer to give you a check, not many banks until recently would even talk to you because you were too small for them. So, a bank like SVB playing that very important role I think time will tell as to what will fill that gap, but it's definitely a big setback for the venture ecosystem globally.
Yes, you're right in pointing out, Nitin, that the extinction event, that threat may have passed for now, but we don't know whether the contagion impact will stop here. There are all kinds of rumors on other banks. Secretary Yellen did in her comments say that there were a few other banks that she was watching closely, monitoring closely. Of course, she didn't name any. And to your point about, who fills the gap, I think those are going to be questions that we will need answers to in the times to come. But Vaibhav, what are the next steps now? This is, of course, going to work itself out over the next few days, I would imagine. But from a startup perspective, from a founder's perspective, what are some of the other existential questions that are now being addressed and founders are being forced to grapple with?
No, great question, Shireen. Look, I think this is not a shock anybody else of us want to have, but I think it has been a great learning lesson for me personally, as well as many of our startups where we worked through the last 3 days. And I think what we are basically saying is, how do we be resilient, right? You can't really say that, hey, we actually parked money in one place, we did not know what FDIC insurance covered, we never imagined this situation because now we've gone through it, so we can't say that anymore. So I think next steps are really very simple, which is we never ever want to be in this situation as a company. And that's what we're working with our founders on. I think one high-level thought that I've been playing with is how can a startup, right from the seed stage, have access to a fractional CFO who essentially gives them the oversight that is required to help them think through all things that matter, including treasury and how they are parking the funds that they're raising. Because, I've been a founder for all my life as well, and we are all very focused on just business milestones, and several of these things get overlooked. But I think this is an important lesson that the world of startups and the innovation economy has learned. And I know that all our founders and everybody that I've spoken to over the last 3 days is going to just take it seriously. I think we're already putting the next steps in place, and you'll see that we'll all come out stronger.
Well, that certainly is the hope. Vaibhav, what is the exposure of your portfolio companies to SVB?
So look, I think we invest in India companies as well as global companies. So we had about 30% exposure, I would say, but of that we had sort of grave situations in a smaller percentage of them. But look, I think, the approach, Shireen, we took, or I took personally from Thursday evening, was not that, hey, how affected are we? I think even if I had one founder who was not going to make payroll next month, that was good enough for us to make sure we're not leaving any stone unturned, right? And I think what led, just to give you a perspective of what happened, there's just hundreds of founders across countries who essentially were sharing information. I had an LP of mine in the US who was essentially helping us open and fast track, accounts at other banks that were needed at the very last moment. So you can't just, it's just incredible what has happened in the last 3 days. I think innovation economy and all of us around the world will come out of this stronger. And I think it's something that we're going to, learn from forever.
तेरा नाम गूंजेगा तो उठेगा एक तूफान, हिलेगी जमीन, मचेगा घमासान, देखेंगे फिर गेम तेरी।
ये है शुरुआत तेरी, अब हर जुबान पे होगी बात तेरी। देखिए पहला टाटा वुमेन्स प्रीमियर लीग 4 मार्च से जियो सिनेमा पर।
Nitin, in terms of the impact and the implications in the medium term, short to medium term, there is already a general risk averseness, and what we've seen happen today with the stock markets, banks being hammered across the board, whether it's in the US or in EU or even here in India, we already know the situation that VCs are facing at this point in time. What does this do to the general risk appetite, and does it worsen, heighten the risk averseness, and what will that then mean as far as the ecosystem is concerned?
Yeah, look, I mean, it's not a positive development, of course, in any sense. I think that, as was just mentioned, diversification, both from a VC fund perspective, from a startup treasury perspective, from any startup-focused bank perspective, that seems to be the key word. Because one thing that's actually scary in a sense is that this is the first bank run which was sparked and catalyzed digitally. Right? This is the unique thing about this bank run, is that it all happened at the speed of light, or happened at the speed of Twitter, right? And so I think that there will be more events like these in the future. As far as the investment strategy is concerned, I don't think the fundamental thesis of anybody who's investing in India or investing at the first stage or the second stage of the startup journey changes. We, in fact, are looking forward to doubling down and speeding up because I think this is actually the best time to invest. Now, of course, you just have to work harder. Companies will take a little longer to close their next rounds. The mortality could be higher. And, of course, there will be valuation corrections. But fundamentally, you have to keep coming back to, innovation coming out of India or in the local economy is still a fantastic theme. And a lot of funds, including us, will continue doubling down. And if anything, this will hopefully also need to lead to some interesting innovation as far as the startup ecosystem and the services around startups and finance is concerned.
Yeah, well, we'll have to see what it means in terms of innovation. But I think one thing is clear: this is a wake-up call in many ways. I mean, this has been one of the most trusted banks, not just in the Valley, but for startups around the world, as we've been pointing out. And to Vaibhav's point, you had some of the best names in the business, not just in the bank, but banking with this bank. And look where we are today. But Vaibhav, you were talking about the next steps that you're trying to action now in dialogue with your portfolio companies. Give us an indication of what measures you intend to put in place.
So I think, Shireen, it all starts with what did we miss and what were the lessons we learned, right? I was literally, as we were going through this, I said, we're going to see a wave of treasury management startups, which are really going to help you ensure that you don't have an event like this, even if there is a bank that fails in the future, right? So I think there are going to be multiple things that are going to happen. One is, I think, how do you manage your financial strategy and planning? How do you manage your treasury? I think founders have gotten essentially a crash course on learning about all of this and learning about what they don't know. Right. So I think number one thing that we're going to do is we're going to make sure that we have this skill set available to our startups right from the beginning. Number one. Number two, I think what this also exposes, Shireen, is the ability for a startup to react overnight to something that is completely unexpected, right? So depending on how much money you have, how are you going to navigate the next few months if actually we did not see what the Fed just announced Sunday night US time, right? So I think everybody's just going to look at their spends, their ability to manage those spends and react to such situations. And we just want to build resilience as the second point. So, financial strategy and understanding, almost like getting a fractional CFO everywhere. And second is an ability to react super fast to make sure that we never land in this situation where we just don't know where we'll go if something like this happens, right? So I think we'll all, and when I say we, it's not just Indian startups, but globally, I think we'll all come out stronger from something like this. And like Nitin mentioned, I think we'll have tech and products and innovation built over the next several years to avoid some, startups being in this situation.
Well, Nitin and Vaibhav, thanks very much for joining us. I can imagine the kind of panic and the kind of pain and pressure you've had to deal with over the last few days, and we do hope that things start to ease from here on. This is going to be a difficult time. It is going to be a tumultuous time. I don't know if this is the last of the accidents that we've seen, but as you point out, it is something that the ecosystem needs to be better prepared to deal with. But Vaibhav, Nitin, many thanks for joining us here on CNBC TV18. Appreciate your time, and we wish you all the best. We will take a break here. There's a lot more coming up. Don't go anywhere. We're back in a moment with the news here on CNBC TV18.